Analysis as earnings aid U.S. inventory rebound. Issues over future earnings grow. New York's stronger than expected corporate profits have helped fuel the rebound for U.S. shares. However, some traders are pointing to ability dangers beforehand for income that would sap the marketplace's momentum. With the tremendous majority of S&P 500 corporations said, second quarter earnings are expected to have climbed 9.7% from a 12 months in advance, nicely above the 5.6% predicted on July 1, in line with Refinitiv IBES. The strong income have supported a rally that has taken the S&P 500 up about 14% this area, after a brutal first one half. Some marketplace individuals are developing involved, but that sturdy company numbers might not ultimate, as corporations face an array of challenges, inclusive of surging inflation and converting customer spending habits. These may also make it hard for stocks to maintain their recent gains or rise similarly, they stated. There is a few disadvantage to income going forward, and it's revolving round inflation and the capacity of groups to pass on those rising charges, said Paul Nolt, portfolio supervisor at Kingsview Investment Management. I would suppose the next leg, higher, is going to be a touch bit tougher for stocks, he mentioned. Analysts' estimates for full-year profit growth have edged decrease because the begin of July, but nonetheless named for stable increase 8% in both 2022 and 2023, according to Refinitiv. Strategists at fund management giant BlackRock (NYSE) Block, however, are amongst people who agree with the market's perspectives are overly optimistic. One reason is a shift in client spending from goods to offerings that they consider will weigh on S&P 500 profits. While goods make up less than a third of gross home product, income tied to items are anticipated to account for 62% of S&P 500 earnings this year, BlackRock mentioned. This way a growth in services does not electricity S&P 500 profits as a good deal as it does the economic system, they wrote on Monday. Overstocked inventories at agencies including shops and semiconductor producers show that any such fashion is already underway, they mentioned. The chance of disappointing profits is one motive we're tactically underweight shares, BlackRock mentioned. Graphic, S&P 500 income growth, by zone earnings expectancies are remarkably sturdy, given headwinds which includes slowing increase in China and an inverted U.S. Treasury yield curve, which regularly precedes a recession, stated Jack Ablin, leader investment officer at Crescent Capital. He remains barely underweight equities, no matter the latest rebound. Nolt, of Kingsview, has been adding to stock positions in portfolios he manages despite the fact that he's still under his benchmark allocation. Morgan Stanley NYSE, MS's strategists, meanwhile, are centered on the prospect of weakening profit margins. Overall analyst estimates name for groups working margins at all-time highs next year, they mentioned. The aggregate of sustained, better salary costs and slowing cease marketplace, consumer pricing loudly signals margin pressure, which is at odds with positive consensus estimate, they wrote Monday. The corporation believes downward income revisions are going to boost up over the subsequent 2 months, primarily based on historical records going lower back to 1996. At the identical time, rising valuations could set a higher bar for earnings to are available robust enough to justify the improved costs. The ahead price to earnings estimate for the S&P 500 has risen to about 18 times after falling underneath 16 times in June, consistent with Refinitiv datastream. The ratio continues to be well beneath the almost 22 times degree reached on the begin of the 12 months. For now, however, organizations have persisted to expose better than expected strength in income. Walmart NYSE, WMT, on Tuesday nudged up its annual profit forecast, partially reversing a hefty reduce less than a month ago, at the same time as Home Depot NYSE, HD's quarterly sales exceeded estimates after demand from developers and better expenses helped it cushion a hit from dwindling store visits. Indeed, a few market watchers believe the upbeat earnings trends will persevere. Citi strategists said in an August 12 word that profits revision trends had progressed to date in August versus the preceding month. The stabilization in revisions is encouraging, Citi stated in the notice. However, 2023 estimates have not worked decrease in tandem, so there may additionally still be some risk to out-year estimates.